It depends on whether, as you know, I run a mentor class.
Yes.
Some students I can assist and some I can't. It depends on the nature of the problem. Some people have a lack of discipline through sheer habit. It's a habit of not following through, and that we can create new habits. You substitute, you identify the belief system behind their lack of what payoff there is for not following whatever it is they want, for not following through.
Okay.
And NLP teaches you a number of techniques that allow you to substitute positive beliefs for that negative belief, and you slowly create new habits. That's doable. However, some people have a really deep problem, and I think the best way of doing that is to tell a story. I had a student called, I won't mention names, let's call him Stuart.
Oh, okay,
and,
thanks.
No matter what I did, we had this major problem that Stuart could not trade leveraged instruments. Stock market, he was fantastic. Followed the rules.
And this is sounding very much like me. Just make this clear that this isn't me.
Okay.
Right?
No, this is not you.
Call him John or something.
We'll call him Mike.
Okay, Mike. Thank you.
This is a true story, so this is his real name. Okay, Mike, if you're out there, forgive me. And Mike could trade stocks perfectly. He wanted to trade futures, and I tried to help him out. He did the mentor plan, and honestly, I was at wit's end. Nothing I did worked. It just would. I couldn't understand why he would follow discipline trading stocks, shift him into a leverage instrument, and he became the biggest cowboy in the world. There was a guy called Dave Hunt that used to run some seminars for me in Sydney, and she brought out Ruth Barron Roosevelt, an NLP coach. And she did an exercise, and Mike got brought into this exercise, and basically this exercise causes regression. We go back to childhood or whatever. And in the process of that, the story came out. Mike's grandfather had lost the entire family fortune trading gold futures. So throughout his life, he was brought up with one: trading futures is a sin, it's gambling. Honest people don't do it. And that's what I call fundamental belief that was running through Mike's head. And he was unconscious of that. And so whenever he traded futures, and there was no way I was going to find out. He was going to sabotage himself.
Wow.
And if you have that sort of problem, you need someone who's skilled enough to bring it out. And you need a psychiatrist or a psychologist or someone very well versed in that area of the world.
To go deep into the mind.
Bring out an unconscious fundamental belief paradigm.
It's amazing.
It is, and those I would find very difficult.
And he wasn't aware of that.
He wasn't aware.
He just
broke
been
down
sabotaging himself.
And he cried at the seminar. It was such a emotionally draining event that it was men, especially Aussie men sitting around a group and the guys crying.
That's not healthy.
Not very uncomfortable, but it was and Michael from then on I think turned the corner. As far as I know, he was able to start trading the discipline that he needed to do for futures. So
that's amazing.
It's amazing, and as you'll see in the blog, I actually did 10 years of therapy, and the stuff that comes out is just unbelievable. I would recommend it to any trader.
So, but the other thing is it's more habitual. It's more we get into bad habits, and there's a reason why we do that because there's a payoff for it.
Yeah.
So identifying that payoff and then maybe changing habits, which is possible.
That's the norm. I mean, Mike's case is an exception. I mean, otherwise, coaches wouldn't be able to have the rates of success that they do with traders.
Okay, sure.
The fact that they do means that the habitual thing is the issue. That's a surface problem and can be changed with behavioral.
Okay. A couple of things before we finish, if I may.
Sure.
The world's going through a bit of a mess at the moment, and the global economic crisis. How has that affected your own personal trading? Like, what impact does that have?
Well, I have a rule which says that if the any market that I'm trading, I shouldn't say market, instrument that I'm trading goes mean plus 3 standard deviations for 2 consecutive days of the average true range, then I'm automatically out of that instrument until one of two things happen. Either the instrument goes back to its normal previous ranges, or there's enough data points, and I need about 45 data points to create a new state of volatility. And we're just in flux. I've been out of the market since October. I'll probably stay out till January. So far, we've seen no decrease in the volatility, but increased volatility looks like to be a fact of life. And I think that we had this market take out the 202 lows last night, the stock market. We're very close to 50-50 on crude. If we take that out, the next stop's about 25.30, which means we're going to form a sideways range between $25 and $147.
It's a big range.
Big range, plenty of opportunity. But the key factor is going to be the stock indices. If we, in the S&P, which is the one I trade, basis cash, if we have a close below 621 on a monthly basis, which I say bearish conviction, it's got to be a bear bar, not just a close. It's got to have some sign, opening on the top and closing at the bottom type thing. Right. And half the bar being at least below 621. If we get that sort of bar, then we are correcting 1931.41 on the Dow to 15,000. On a log scale, 50% to 760, roughly. If the Dow comes back to 760, do you know what that will do to the world's economy? Scary.
Yeah, it is pretty scary. So it is very much volatility based. And right now you're out, and primarily volatility.
Well, we had a very good year. We turned gross fees. We had 38.5. Net, we take about 30% of net profits.
Okay.
Now
this is 2008 we're talking, and we're talking major world indices have lost 50%, and you're still...
We're up, and the average hedge fund's been down 20%.
Oh, that's terrific.
So it's been a very good year for us.
Fantastic. Okay, well, to finish off then, let's say you had a close friend or a member of your family come to you and say, Ray, I really like what you do and I like the lifestyle you have. What's the number one piece of advice you can give me because I want to start trading myself?
Okay, I would say that if you're thinking that you can trade with very little effort, very little money, and no discipline, forget it. What you see out there, I said earlier on that we're luckier now because there's a lot of good people out there trying to help. We've also got the same old junk that's out there, promising the world with no effort.
Yes.
If that's the attitude you've got, go get a job, do something else. Because to me, trading is one of the most difficult professions in the world because you're constantly challenging your emotions. And what you want to do emotionally and what trading needs you to do is separate.
Yes.
We run from pain and we walk towards pleasure. You do that for trading, it means that you're going to let your losses run and cut your profits. You know the story. We've got to turn that around. So if you have that attitude, forget it. If you're prepared to work, if you're prepared to take maybe 2 to 3 years to get to the point where you're making some decent money, and maybe take you 7 or 8 years to master the profession, if you've got that approach, it's the greatest profession in the world. I wouldn't do anything else.
Yeah, okay, that's great. So 2 key words I heard you say: discipline.
Yes.
If you think that being undisciplined is going to help you, then you're sorely mistaken. And the other thing was, you didn't say this word, but I think you implied patience. That it does take time to develop the skills and the foundations and that basis, I guess.
Absolutely. If you're going to be a good trader, you don't have to be a master trader. You have to, because 89% of people out there where your competitors are losing money to you, and that applies no matter where you are. I mean, one of the things that Taleb said in his book, which is a really good book, Fooled by Randomness in the Market, people confuse being good with being lucky with being good, and that applies to hedge fund managers. That's why we're getting such a run on hedge funds, because they were able to raise a lot of money in a very good bull market.
Yes.
Any fool can make money in a bull market. It's the proof of the pudding is what happens when you get hit like this. So that being the case, you need to have that discipline, and you need to put in the time to acquire the expertise.
Okay, excellent.
It's not easy.
Sounds easy. Well, Ray, thanks very much for your time. I know I'm heading off to China this afternoon for that event in Shenzhen, which I'm looking forward to. Thanks for lunch yesterday. It was very nice.
You're welcome.
Thai food. It was good to see you here in your home in Hong Kong. And ladies and gentlemen, I hope that's helped you and gained a bit of an insight to a man who's been in the markets for many, many years and has grabbed a great deal of experience in the market. So, Ray, thanks very much.
No, thank you, sir.